You see these little babies? Those are buffaloes. Those are CU, University of Colorado Buffaloes, right? Tomorrow afternoon we go to the University of Oregon. It's been a very long 15 years here, and we think maybe tomorrow's the day, but foolishness of football fans. Back to the Federal Reserve. The copy near this video, I apologize to most normal people that it's so often incomprehensible when it comes to the Fed and its policies and the Bank of Japan and the European Central Bank. And a lot of people in financial markets, people who even know a lot about central banks, years into this economic recovery since the Great Recession, evident financial trouble around the world, but these central banks messing around with it all. Many people think, why not just leave it alone? Why not let markets function? Isn't it possible that you're making all of this stuff worse instead of better? Or that you just don't know what you're doing? I mean, you're obviously very busy, but nothing seems to change very much. The questions are legitimate. The people who feel that way are preyed upon by others in the Wall Street tribe, often who are embarrassed about the investment returns that they're earning for their clients. But today's letter tries to describe the interest rate management differences at the U.S. Federal Reserve, where we have at least a modest economic recovery going. The overnight cost of money is practically nothing. The Fed has raised it once now in 8 years, and it raised it from 0 to 1/4% to 1/4 to 0.5%, and that was almost a year ago. The big argument is whether they'll go another 1/4%, or whether it might have this week or in December. Meanwhile, Japan and the Bank of Japan, Japan has been a sinking ship now for nearly 30 years, and for complicated reasons that are all intrinsic to Japan that have very little to do with the outside world. And the Bank of Japan is in, I mean, we have thought over and over in the last 30 years that the Bank of Japan had finally, this is the last ditch, they can't go any farther. The thought, the desire to stop meddling, to just stop and let the world go on about its affairs. We did that once before. The historical moment was 1930. It's a year after the crash of '29. European and American economies, global economies going straight downhill. U.S. banks began to fall in large numbers, ultimately 17,000 of them. And the Fed sat still. It took the advice of the American Treasury Secretary, Andrew Mellon, which was, this cleansing is good, just let it go. And 2 years later, it was a good thing that so many Americans lived on or near farms, because at least they could grow their own food. We tried letting it go once. Now, the lesson has been, central banks everywhere, to be active, to be as active as necessary to prevent that kind of crater from happening again. Now we're in, a lot of people want to think of it as an end stage, that the central banks are without power, that they've lost their ability to influence economies or to influence the evident trouble around the world, if not in the United States. It's not so. Central banks, if they are pushed into a corner where they're dealing with an economy that is literally crashing, they will do whatever is necessary to prevent the crash. They have never had the ability, and they know it, they don't assert the ability, to make things good. The best they can do in bad times is to put a net under us, to try to keep us from crashing. As all of the central bank chatter goes by, try to hang on to that one thought. They don't have the ability to fix it. They may have the ability to put a net under it almost no matter how bad it gets. And most of the world's central banks today are doing exactly that. Only here in the United States do we have the luxury of whether the central bank should actually raise rates a little. Do have a good weekend. Go Buffaloes!